Hey traders, students, friends, and family from all over the world. This is Jerremy Alexander Newsome with Real Life Trading. I hope you're doing absolutely fantastic. So, I had a lot of requests for this particular real life stock review, Coke versus Pepsi, dun dun dun, in the battle. And I decided to take it one step farther, and we're going to also do these two over here, Sprite versus, what is that, Sierra Mist. Now, 7-Up, I thought, was a Pepsi product, actually Dr. Pepper's. Dr. Pepper product, which will be another real life stock review in the future. Stay tuned for that one. So anyway, I'm not going to really do a blind taste test on this one because unless you are really a soda professional, I don't think you can actually tell the difference between the two via color. Or at least I can't. You're going to have to trust me on that one. So we're going to pour it. I'm going to do a taste test between Coke, Pepsi, and Sierra Mist and Sprite. We'll go from there and then obviously review the charts as well. Thanks so much for watching, and I'll see you in just a second. All right, we're back with the battle of the clear liquids. We have Sprite versus Sierra Mist, and here are the two in the containers in front of me. Now, again, visually, there is no distinct difference between these two at all. They look like bubbling water filled with sugar. And this one on my left, your right, has a little bit more, I was about to say more larger, but good thing I didn't because that's grammatically incorrect. These have larger bubbles on my left, so I'm going to go ahead and try this out. And this is going to be interesting to see if I can guess. Ashley, you know which ones are which, right? Mm-hmm. Okay. Oh, man. Okay. I think I got this. I think I got this one. All right, I'm going to try this one now. Oh, I thought I had it until I had this one. Oh, that is tough. That is really, really tough. Okay, I'm going to have to try again. Oh, man, that is really difficult. There's almost no distinct difference. They're both so lemon, lime, fresh. By the way, the only way to drink a beverage, pinkies up. Okay. This has a little bit more of an aftertaste. So I'm going to go, this one is Sprite and this one is Sierra Mist.
Nope.
I'm wrong?
Mm-hmm.
Okay. I'm backwards. Okay, so this was Sprite and that was Sierra Mist. They're really almost, you can't differentiate those two, at least in my opinion. They taste almost identical. Now with ice, I might be able to switch it up a little bit, but no go on that one. All right, so next is the big daddy, the grandfather of them all, Coke versus Pepsi. Let's see if I can tell the difference between the two. All right, we're back with one of the most controversial taste tests of all time, Coke versus Pepsi. And I'm going to do my best to distinguish between these two bad boys. Now, I really, truly do not drink that much soda. If I do, it's with another beverage in between. So Pepsi Cola, 150 calories in this particular container. And we have 6 servings in the container and 41 grams of the sugars. And this one, we have 6 servings per container as well. 140 calories, so that's 10 calories less. And 39 grams of sugar, which more or less means Coke just had to be a little bit better than Pepsi. You know, it's one of the most recognizable brands in the world. Actually, I think the most recognizable brand in the world is Coca-Cola, the actual symbol. All right, let me give this one a shot. Again, visually identical. You cannot visually see any distinction in between these two. Ashley said they have very distinct different flavors, so I'm going to give this one a shot. Let's see what's going on. Like that, shot, see, pun, huh? I haven't tasted Coke and Pepsi by itself in so long. All right. I think that one's the Pepsi. Nope. This is Pepsi 100%. Am I right? To find out if I'm right, stay tuned to the end. I'm going to go ahead and do the real life stock review of these two products. And then at the very end, I'll let you know if I'm right or wrong. We'll see. Ooh, I bet you are so excited to see if I got it right. Well, let's look at some charts really quick on both Pepsi and Coke. We'll start with Pepsi, and there's going to be a little bit of a common theme between both of these. Now, both Coke and Pepsi are what are commonly referred to as blue chip stocks. And blue chip stocks are stocks that, aren't very volatile, that are really kind of the good old American companies, that have been around for a long time. They're well suited, they're well established, they have good products, good income, and they pay dividends. The vast majority of what's called a blue chip stock pays dividends. And usually they're in some type of index, right? Like the Dow Jones or the S&P or the Russell. So on Pepsi specifically, notice first and foremost back here in 2008, 2008, right? The very beginning of 2008, very late part of 2007, is a resistance price right around $79. And I think that's fascinating because that particular price came back into play as a support back in 2013. So notice how well old resistance did in fact become new support. Now, I know some of you are saying, well, there's no way we could have predicted that. Well, you couldn't have predicted that in 2008, but once this price peak was created, you absolutely could have drawn that line there, and it would have simply given you a future perspective of what to look for, right? Now that you have that line, you can say and pretty easily create a trading plan that would say, if the stock bounces off this particular price, I can buy it. So in 2013, using that old resistance as new support, I'm not saying you had to do it the very first time. I'm not even saying you had to do it the second time or the third or the fourth, but let's say the fifth. Let's say you did it the fifth time. Fifth time after it happens, you bought in at approximately $78 a share. Well, if you bought in shares at $78, where would you have sold them? I think it's a very valid question. And the answer is, well, you could have easily sold them at old resistance. Where is the old resistance? Well, approximately $87 a share. How would we have known that? Well, that's because that's the price at which the stock got sold before. So notice right here, it sold once, sold twice, 3 times later. So right about there at $87 a share. So from $78 to $87 a share, that represents a $9 increase in the stock price, or approximately a 10% return on your investment. And notice that was only from February 2014 to approximately May 2014. So 3 months, 10% return on your investment. How sensational. Now, a lot of you are saying, well, Jeremy, notice that it has gone much, much higher since then. And true, absolutely, without question. But notice, once it broke through the resistance, my question to you is, could you have taken the profits from your previous trade and reinvested those profits in buying the share as it broke through the resistance, right? You take your profits, buy as the stock breaks out, old resistance at 87 becomes new support. Now, again, how would you have known where to sell? Well, realistically, at the $150 price range, you probably wouldn't have known, unless you're good at candlesticks, probably exactly where to sell at that particular point in time. But notice, it just came back up to that exact same price again, and we're starting to get some selling pressure. How ironic, right? So what can we do with this information now? Well, the information that we have now is that there's obviously some type of support around 92.69. So what if Pepsi comes back down to 92.69? Could we have a plan outlining our future objective to buy it at 92, hope for a bounce up to 100, realizing approximately $7 per share profit, which again is around 10%, a little bit less, but about 10% return on your investment? You see, that's what a trading plan is, creating a plan for the future. We can never control the market. All we can do is control ourselves and plan ahead. That's what the big boys do. Big boys, they put their big boy pants on and they plan ahead about what they want stocks to do and why. Now, of course, if Pepsi breaks through this $140 price range, that old resistance will become new support, something like this, and you could continue to buy it, and hopefully it goes higher. Now, if you are in shares of Pepsi, you could also, at this particular point in time, do something what's called a covered call. Now, I'm not going to explain a covered call specifically in depth in this particular review, but let me just give you an idea. A covered call is you are literally selling your shares you're selling the right to someone else to own your shares. So if I can explain it really quickly, if you bought shares at, let's say, 100, and you sell a covered call at 103, you are saying to, let's just say, Joe Baker, lives in High Springs, Florida. Hey, Mr. Joe Baker, I am giving you the right to buy my shares at $103. If you bought them at 100, why would anyone do that? Well, because Joe Baker thinks that the stock's going to do this, and he wants to buy those shares at 103 because he thinks it's going to go to 110. So if he buys at 103 and he thinks it's going to go to 110, he'd make a $7 per share profit. Well, if you do a covered call at 103 and the stock does go to 110, you keep your $3 per share profit plus something called covered call premium. And I'll be explaining that in some future classes in real life trading. But overall, ladies and gentlemen, the truth of the matter is doing a covered call adds no additional risk to your trade. It's exactly like renting out your stock to somebody else, literally being able to bring in money every single time. So if you do a covered call and the stock goes down, you keep the covered call premium. If the stock goes sideways, you keep the premium. If the stock goes up and you sell your shares at 103, locking in a profit, you keep the covered call premium. So hypothetically, if you bought here and the stock comes up, you could do a covered call. Stock comes down, stock comes back up. You could do another covered call. Stock goes down, stock goes back up. You could do another covered call. And the stock goes higher. You get what's called exercised, and you get premium each time you do that covered call. So there's premium there, there's premium there, and there's premium there. So you're locking in 3 covered call premiums, which sometimes can equate to anywhere between 0.5% and 1% of your net value on the trade monthly. So on Pepsi, let me just give you an example right now on Pepsi. Let's say that we are we're in the first week of February. Well, I'm sorry, first week of February, first week of March. So let's say I do a May 103 covered call. How much money would I be bringing in per share, per 100 shares? So I'm going to go over to Yahoo Finance, click on options, and I'm going to go and click on, I'm actually going to do April. Let's do April. April is about a month and a half away, and they actually have 100 and 105. So a 105 would be even better in this situation. A 105 would bring in 38 cents approximately per 100 shares. So if you had 1,000 shares of Pepsi and you sold a 105 covered call for April, that means that you'll be bringing in $380 of covered call premium, and you would receive that premium regardless of what happens to the stock. If the stock goes and stays below 105 by the third Friday in April, you can turn around and do that exact same trade again. If the trade goes up above 105 and you get called away, well, you're locking in a profit, you're selling your shares at a guaranteed profit, and you can simply go and buy another trade or buy another share or buy something else. Maybe you could turn around and go buy some Coke stock because Coke is a little bit cheaper than Pepsi. Now, that doesn't mean that it's more valuable or less valuable, but it does mean that people are buying Pepsi more than they're buying Coke, and we can tell that for sure because, well, Pepsi's stock is higher than Coke. So let's go ahead and just bring this up and looking at Coca-Cola. And I already have some pre-drawn lines on here on Coke, and you can see some very, very interesting price action. So the price action you can see at the moment, I'm going to get this little guy over here. You have a $44.82 resistance, which is a pretty strong resistance on Coca-Cola. So if I just get this little line off right here, this little guy, get that away, there you go. You can see that the 44.82 is a really strong resistance, and we do have a very interesting trend, something of increasing prices, something that looks a little bit like this, right? So imagine if Coca-Cola trades sideways and then broke through this 44.82 price range. Would you, at that point then, be more bullish than bearish, or would it make sense to buy some shares? And in my opinion, I would think yes. What would be a good covered call price to sell for Coke? Well, you could sell a covered call at this particular price or higher. So let's just go over to Coke. And on Coke, ticker symbol KO, you can go to the option chain. You could go, and let's say the exact same thing, April. And we'll do an April 45 for Coca-Cola. And again, you can see about 33 cents per share, which is, very similar to Pepsi. Now, not only could you do covered call premium, ladies and gentlemen, but on both of these particular stocks, they both pay dividends. So if you own shares, and Coca-Cola pays 3.1% dividend, if you own shares and you do a $45 covered call for April, if Coca-Cola stays below $45 on the third Friday in April, you get to keep your 33 cents per share. And if there's a dividend between now and then, you also get the dividend. So it's kind of like you're winning twice. And in my opinion, I would imagine that Coke probably will stay below $45 by the third Friday in April. But what I can say for sure is that we're getting some higher lows in this little area. We're getting some lower highs. We're going to trade sideways for probably another few weeks. But if and when we do break above 44.82 strongly, if it does happen for April or not, I would be, in that opinion, or in my opinion, a little bit more bullish than bearish on Coke because it would be breaking that all-time high price range. Let me just make sure it is the all-time high. Yep, it is indeed the all-time high. And what's really interesting is you can see here in 2000, Actually, I'm sorry, 1998, Coca-Cola had an all-time high of 42.47, and notice what resistance or what price range we're running into just recently that's giving us so much trouble. How unique, right? So I do imagine that Coke could really trade sideways in here for a little bit, and then if we do break higher, I think Coke could move a little bit, especially if their CEO sees Real Life Trading doing the Real Life stock review of their product. So let's hop back over to the live studio in Nashville and see how I did. Guys, thanks so much for watching this stock review. If you have any questions about any strategies, trading related, equity trading, option trading, feel free to reach out to us at reallifetrading.com, and you can email me directly anytime at jeremy@reallifetrading.com. Thanks so much for watching, and remember, love life, live life, and trade it. All right, thanks so much for watching the Real Life stock review, the actual charts. I really appreciate it. I do these videos to really give people a perspective and the idea of, well, really in a way, real life stocks, right? Because stocks and companies are all around us and we interact with them every single day, but they are publicly traded, and you can use that information, the analysis and the data that I'm reviewing to trade and actually make money doing so. And that's what Real Life stock review and real life trading is all about. It's because showing what professional traders do on their day-to-day basis and showing that the stock market's not something that's scary, mysterious, illegal, gambling. It's nothing like that. It's just another avenue to generate income. And anyone really, in my opinion, regardless of geographical preference, income status, they can learn how to trade the stock market. And I want to teach you. So feel free to hop over to reallifetrading.com at any time. All the educational material is free, saving you tens of thousands of dollars on the education itself. And the moment you all have been waiting for to find out if I'm right or wrong. I have dubbed the right container as the Coca-Cola and the left container as the Pepsi. This one definitely had more of a sugary, syrupy taste at the end, in my opinion. It was almost the exact same until the very, very tail end. That little after kick kind of pushed it over the edge a little bit. And I said this one's the Pepsi, and Ashley said I was
correct.
I was right. All right, so I was wrong on Sierra Mist and Sprite. I mean, truly almost identical products, probably the same thing in different wrappers. But Coke and Pepsi really do have a quite distinct taste. And if I'm mixing anything, I prefer the Coke other than the Pepsi. But above all of them, I prefer Dr. Pepper, which will be in a future Real Life stock review. I'll see you then. And until then, friends and YouTube and internet, remember, love life, live life, and trade it. I'll see you.